Thank you for your patience. We'll get started with our financial goal setting class today. So first, to start off with, what is a credit union? If you're not familiar with what a credit union is, we provide not-for-profit banking products, loans, and other services. Credit unions are owned by their members who have a say in how the credit union is led and operated. Every member is an owner, so it's a democratic financial institution where members vote for the board of directors to have a say in how the credit union is run. So the credit union difference is that we are for people, not profit. And this slide is just kind of how credit unions work. So first, you deposit your money with us. We use those funds to make low interest loans to other members. And the profit made from those loans is put back into the credit union and returned to you as better rates and fewer fees. We exist to serve our members. So a little bit about Denver community and who we are. Our mission is to educate, deliver, and achieve. We want to have a well financially educated community. We're a not-for-profit financial institution, and we've been serving Metro Denver since 1934, so we've been around for a while. This class is a part of our free and award-winning Clear Money program, our financial education program that includes our live classes and coaching, e-learning courses available on our website in English and Spanish. Oh, excuse me, my slides are jumping there. And our one-on-one financial coaching is also available by Zoom or phone to answer any of your personal finance questions and help you reach your savings, budgeting, credit, and other financial goals. You can always request a financial coaching session at denvercommunity.coop/coaching, and we'll get in touch to schedule a time that works well for you. I'll also be putting my contact information in the chat box at the end of this class today, and you can reach out to me directly for a coaching session as well. So first, I want to start out with a poll question here. Please just respond in the chat box if you're able to. And the question is, why do you want to set financial goals? It could be for financial security or to pay for a child's education. Why don't you just drop whatever reasons you'd like to set financial goals in the chat box today? Give everyone time to get their answers submitted. All right. Money for retirement, child's education, financial independence, financial security, buying a home, retirement. Absolutely. These are all great reasons to be setting financial goals. Buy a home, retirement plans, absolutely. Paying off student loans, that's a huge one. I'm working on that one myself. These are all great reasons to be setting financial goals. Thank you so much to everyone for participating. So now looking at financial goal setting, why do we set financial goals? And the reason we set these goals is to develop a roadmap or a plan to achieve our goals and be able to stay on track. Goal setting will help you with your everyday financial decisions after you set SMART goals and empower you to move closer to the future that you want for yourself. Setting financial goals gives you a long-term vision and keeps you motivated in the short term. And your goals should tie into your values and priorities and not other people's. So if you value financial independence, your goal might be to build savings or pay off credit card debt. If you value, family, your goal might be to save for a child's education. So now we're going to take a look at long or short-term goals. And a lot of times members will ask me, which one should I have, long-term, short-term? And the answer is you're going to want both. So if your long-term goal is to have a comfortable retirement, your short-term goals might be to pay off your consumer debt, reduce your expenses, and increase contributions to your retirement fund. So looking at short-term versus long-term goals here, a short-term goal we typically define as a goal attainable in 1 to 2 years, while a long-term goal we define as a goal that's achievable or attainable in 2 or more years. So things like retirement, possibly saving up for a down payment on a home, those are typically longer-term goals. And these big goals can take time. So it's best to break them down into smaller, smart goals so you can use these goals as stepping stones to reach your long-term goal. Try to set a goal for yourself by the end of this week. Add a reminder to do so, whether it's on your phone, your calendar, have a friend remind you. Most people, including myself, have a tendency to procrastinate. So giving yourself a deadline or telling someone your deadline so they can check in on you and ask if you've started a plan is a great way to start working towards your goals. Now, I have another poll question here. This is just multiple choice. You can respond A, B, C, or D in the chat box. So, what percentage of NFL players are bankrupt or facing serious money troubles after only 2 years of retirement? So, A, 34%, B, 56%, C, 65%, or D, 78%. Let's see. Got answers all across the board here. We got some C, some B, got a couple D's. I'm seeing a lot of C's and B's. The correct answer for this one is actually D. 78% of NFL players, and these people are making, hundreds of thousands or millions of dollars every single year. And after only 2 years out of retirement, 78% of them are facing money troubles. So I include this example just to show that it's not about how much money you have at your disposal to spend and save and invest, but it's about how well you manage your money. I found this stat to be very surprising myself. So now we're going to look at what elements contribute to a successful goal. Research finds that people are much more likely to achieve a goal if it's written down and tied to a plan. And SMART goals stand for specific, measurable, attainable, relevant, and time-based. And we'll dive into each component now. So first, looking at that S, specific. You want to make sure that the outcome of your goal is very clearly defined. So a good example would be save money for an emergency fund. You know what you're saving for and where it's going, not I should save money at some point. That's not very clear or concise. You don't know what you're saving for. You want to make sure you give your money a purpose by tying it to your values and priorities. So if you're not really sure where to start with setting financial goals, just list all of your values and priorities that you have and try to tie a goal to those. M stands for measurable. So how will you know if you've met your goal or if you're on track to meet it? And that's by giving your financial goal an exact dollar amount. So in this example, if you want to save $1,000 in 1 year starting today and you're paid weekly, you can calculate how much you need to save from each paycheck to meet your goal in 1 year by dividing $1,000 dividing by 52, which is just the number of weeks in a year. And in this example, you would need to save about $19.23 out of every paycheck to meet this goal. And you can track your progress over the course of the next year by calculating what percentage of $1,000 you've saved. So as you can see here, if you've saved $100, you're 10% towards your goal of saving $1,000. A stands for attainable. So while it's good to challenge yourself and think big and push yourself to reach big goals, you'll want to make sure that your goals are realistic and take into account your bigger financial picture. In this example, you need to determine if you can realistically save $20 from each paycheck while meeting the rest of your other financial obligations. Cutting your spending is a great way to free up some extra cash, but some of your bills and expenses are likely non-negotiable needs like your rent or utility bills. Keep in mind that you can always update or revise the dollar amount and other elements of your SMART goals if you need to, so they're more achievable and realistic. You also might want to consider trade-offs you may need to make. If your goal is to save $1,000 in an emergency fund and you have some unexpected expenses come up, you may need to stop temporarily or decrease the amount of money you set aside for this emergency fund so you can look out for your overall financial well-being by paying all of your bills on time, for example. R stands for relevant. So, what is the value that drives this goal? And does your goal fit in with your value system and your overall financial priorities? So, we'll just use the same example. If your goal is to save $1,000 for an emergency fund, this would help with financial security. So, if you have an emergency, you are able to cover that emergency or that expense. This goal would also align with not taking on any more credit card debt or eliminating credit card debt. By building an emergency savings, you can avoid taking on or raking up extra credit card debt, so your short-term goal is relevant to your bigger value of financial security. T stands for time-based. So you want to determine exactly when the goal will be achieved by and when you will start working towards that goal. So you want to ask yourself, when will you start setting money aside for this emergency fund? Will it be tomorrow, your next payday, next month? And by picking an exact date to achieve your goal by, you can develop an accurate plan of action to reach it. So in this case, we have that $1,000 divided by 52 paychecks gets us about $20 a week. If you are someone who is paid bi-weekly, you would divide 1,000 by 26 to decide how much you should be saving from each paycheck. And if you are paid monthly, you would divide by 12. So that's how you use those to figure out how much to save from each paycheck. Tips for success with financial goals. Goals do not have to be complicated. For goals you're setting for yourself, it can be something as simple as I'm going to open a free savings account and go from there. So one, write your goals down, whether it's on paper, on your phone, on an online Word document, just write them down. Your goals are more concrete and likely to be achieved if you do write them down. State your goals as positive statements. I will instead of I won't statements, so that your goals are positively worded. Using action verbs helps too, like I will, or use I will instead of I would like to. We want them to be very strong, concrete goal statements. 3, measure your progress at predetermined intervals. And this is something you'll have to decide what will work best for you. That could be monthly, it could be every 6 months, or annually, depending on your goal. Number 4, review your goals and adjust or update them as needed. If your life, work, or financial situation changes, revisit your goals to make sure they're still achievable and align with your values. I recommend looking over your goals at least once a year just to make sure you're checking up on your progress and they do still align with your values and your financial priorities. 5, tap into your motivation by using visualization. So ask yourself, why did you set this goal in the first place? And then visualize how your life will be different by achieving this goals, or how will you feel if you don't accomplish this goal? And use those feelings to motivate yourself to stay on track for each one of your goals. I personally use this one all the time. A big goal of mine, and I saw a few other people mention it as well, was to buy a house in the future. So something that I imagine is, getting the key and turning the key to my first house, being able to open the door and just let my dogs run in and be able to decorate and play in the yard, all of that good stuff. So I use those feelings to keep me motivated to save for my down payment to buy a home. 6, everyone has setbacks. It's how you deal with them that matters most. If you get off track, it's okay. Adjust accordingly, but don't give up or allow a temporary setback to deter you from reaching your goals. Your goals may need to be adjusted. Emergencies happen, life happens. I say, heck, 2020 happened, but continue to set and work towards your goals. Like a GPS, you can take a wrong turn, but get back on your path as soon as possible. Money personalities. Understanding and being conscious of what your money personality is can be very helpful for deciding how to manage your money. It's important to understand your natural tendencies towards money management before you adopt a budgeting system that works well for you. We are all very different, and the better you understand your money personality and your money management tendencies, the better prepared you are to tackle your financial goals armed with that knowledge. Take that money personality quiz on your own time. There is a link here, and you'll be provided with practical advice on your predominant money personality types. There's like spender, hoarder, avoider, amasser, and a couple others. It will kind of take the answers that you pick and form your money personality from those. The truth is, no one will ever care more about your money than you do. So when you have goals that are meaningful to you and you are motivated to achieve them, you are more willing to make trade-offs and shift your spending habits to achieve those goals. Changing spending habits is not an easy thing to do. I'm a visual person, so when I'm saving for my house, like I currently am right now, I took a little piece of paper with a little house on it. I'm not a very good drawer, so it's not the prettiest house, and taped it to each one of my debit and credit cards to remind me of this big goal. It's a value and priority check every time I pull out my card to buy something that I don't really need. It's a great reminder, when I pull out my card, if I want to have some impulse spending or go get a bite to eat or, buy something I don't necessarily need that gives me those feel good feelings. It's a good reminder on my card that I don't need these things and I'm saving for a bigger, a bigger goal. Yes, I can share that link. I will share the link at the end of the class. Great question. Just someone remind me at the end and I will share the link then. So now we're going to dive into spending plans, aka budgeting. So why do we budget, or why do we make a spending plan? And that is so you can spend and save money in a way that makes sense for your financial well-being. And how are you going to free up extra money or know how much money you have to set aside for your financial goals if you don't have a budget? And by making a budget, it gives your spending and money a purpose so that you don't neglect your overall financial goals or wonder where all of your money is going. Like I said earlier with that NFL example, it's not always about how much money you have, but how you manage your money. Even just setting aside $5 a month into savings is great to get in the routine of saving money. And we like to reframe the word budget and call it a spending plan. And that's just how you're spending and prioritizing your goals and your money, not about how you're depriving yourself or living frugally. Everyone has to make trade-offs and prioritize what they want to spend on because there's no end to what we could spend our money on. I have another poll question here. So what is the first thing that comes to mind when you hear the word budget? Just respond in the chat box. It could be good, it could be bad, it could be ugly. I know I don't always have the best thoughts right away when I hear the word budget. So what do you think of? Got a few here. Limitations, self-control, restricting, um, a plan for managing spending, being responsible with your money. Incomplete, how to manage your income versus expenses, knowing where your money goes. Absolutely. Sometimes when I hear the word budget, I feel like I have to like pinch pennies or live frugally. So that's why I like the word spending plan, where it's kind of just I'm allocating my spending on where it's going. Opportunity, absolutely. These are all great answers. Thank you so much to everyone who participated. Exposes the reality of your spending. That's a great answer. I know before I started budgeting, I felt like my money just disappeared out of thin air. Once I started budgeting, I was able to see where I was spending all of my money, and I was spending way too much money at the grocery store and eating out and random other little expenses that I didn't really think added up. But at the end of the month, they really did. So it really can show the harsh realities sometime of our spending. Great answer. So now we're going to walk through a spending plan example. So I do have templates for these. I have a monthly, bi-weekly, or weekly template that I can send out. I put my email in the chat box at the beginning of the class. I will also share it again at the end. So if you would like any of these templates, I will be able to email them to you. So in this example, we're just going to call them Joe. He is paid $500 every week. Spending plans all start with your income. When you fill out this spending plan, be sure to use your take-home pay. That means the amount of money you receive after taxes, health insurance, retirement funds, anything like that have been taken out. If Joe had any other income, let's say from a part-time job, from a side gig, or child support, he would need to add that to this section as well. If you are someone whose income changes from week to week, you can estimate what you earn on the low end, or maybe just take an average of what you earn each week to use for your budget. The next section of our spending plan is savings. I know when I first started budgeting, I always waited till the end of the month to put savings in my savings account. And what's weird is it seems like when you wait till the end of the month, there's nothing left, right? So that's why we always put savings first. Pay yourself first. In this section, Joe is setting aside $40 from each paycheck for savings, which leaves him with $460 left over from his weekly paycheck. He currently has two different savings goals: to set aside $30 from each paycheck for emergency savings and to save $500 a year for a trip to Michigan. To calculate the amount of money that he needs to save to reach the $500 in 1 year's time, he divided the amount, which is $500, by 52, which is just the number of weeks in a year. And that's how we got about $10. I think we rounded a little bit. But like I said, I do have templates with all of these formulas already plugged in. And like I mentioned earlier, if you were a bi-weekly employee, you would divide by 26. And if you were a monthly employee, you would divide by 12. Please don't get discouraged about saving if you cannot save a lot of money to start. What's most important is to develop the habit of saving money, so no matter how little you start with. As you earn more or reduce your expenses by paying down debt, for example, you can gradually increase the amount of money you are setting aside for savings. Decide an amount that makes sense for you and know that you can increase or decrease that amount moving forward at any time. For example, you don't want to be putting so much money into savings that you'll end up paying late fees or overdraft fees. The next area of our spending plan is fixed expenses. So listed here are all of Joe's fixed expenses, and what we call a fixed expense is an expense that does not change month to month unless you were to cancel or upgrade a service. In this example, Joe's student loans are currently in deferment, so he's not making student loan payments at this time. The reason this spreadsheet is set up for weekly expenses and spending is to make it easier for Joe to know exactly how much he has to spend and save from each paycheck. It also makes things simpler for him if he wants to set up automatic savings transfers and other bill payments, because he'll already know how much money to have set aside for his different spending categories. To cover all of these fixed expenses, he needs about $251 out of each paycheck, which leaves him with $208.50 left over. Because some months have longer or shorter weeks, or longer or shorter months, you take the monthly bill, multiply it by 12 months, then divide by 52 weeks. Like I said, I'm happy to email you these spreadsheets at the end of the class today. For fixed expenses, I recommend always paying more than the minimum amount due for credit cards or other bills like that, so you can pay them off much faster and save money on finance charges like interest. There are other items you could add to this section depending on your fixed expenses. Could be a gym membership, prescriptions, childcare, etc. Next, we have set aside money or non-monthly expenses. This one is always a hard one to plan for. Things like oil changes, birthdays, car tags, doctor's appointments, because they're not part of our regular everyday budget that we use. Non-monthly expenses we define as expenses that you don't have every month, but they will come up at least once during the year. This spending category is where most people, including myself, struggle with and are caught off guard by because we have a tendency to only think and plan about our regular monthly expenses. By setting aside money for non-monthly expenses out of each paycheck, larger expenses that Joe would have will become more manageable, and he's less likely to need to borrow money or rack up debt to pay for them if he's between paychecks because he's been planning for these expenses throughout the year. For example, instead of having to suddenly come up with money for car tags, he's been setting aside about $9.69 out of each paycheck to pay for that expense. Unless you get a new car, your tags will be the same or less than they were the last year. Divide that amount by 52 weeks and estimate what car repairs you may cost you so you're not caught off guard. To save money for all the non-monthly expenses listed, Joe is setting aside $33 from each paycheck, which leaves him with about $175 left over. This is a form of short-term savings tied to specific spending. There are other non-monthly expenses that you might have, so take some time to brainstorm what they might be. Some examples may include dental bills, vet care for your pets, annual membership dues, and insurance premiums. When I first took this class, I thought this set aside money was an amazing concept. I personally use this concept in my budget. So I set aside a certain dollar amount every month for my car. And that includes car tags, oil changes, any repairs that I might need. And it has a very guilt-free feeling when you have to pull money from that account because it's exactly for the purpose you're using. So anytime I have to do a car repair, I feel very guilt-free pulling from my car savings account because I know that's what the money is for. Lastly, we have our variable expenses and fun money. So variable expenses are expenses that vary from month to month or possibly even week to week. These are expenses where it's very easy to overspend, so you want to keep the amounts you set aside for each of these a little more flexible because you can't control all expenses, such as the rising cost of food or gas. Joe, in this example, needs $120 out of each paycheck to cover groceries, drinks, and gas, and discretionary money to spend on whatever he considers fun. I highly recommend including, some fun money or some me money, as I call it, in your budget. So you have money to spend on whatever you like, whether it's a new pair of shoes or drinks with friends, whatever it is, because if you don't have that me money or that extra discretionary money, it can seem like you're pinching every penny and spending no money on yourself. So highly recommend keeping that fun money or me money category so you can spend money on yourself in whatever you'd like. You should track non-fixed spending categories such as groceries, eating out, and entertainment every now and then so you have a realistic estimate of what you're spending and don't wonder where all of your money goes. I know I was having this problem before I started budgeting. It was all of my variable expenses that were out of control. You don't want to try and track everything all at once. That can be very overwhelming and discourage you from tracking your spending in the future. Pick one or two spending categories to focus on at a time to get that specific spending under control. That way, you'll know if you can actually stay within the amount you budgeted for those categories, or you can revise the numbers so they're more realistic and you don't go over budget every month. it's best to track your spending for 1 month, but I would recommend tracking spending, depending on the category, for at least 2 weeks minimum. While it's great to have a budget or a spending plan, be sure to update it periodically when your income or expenses may change, or at least once a year so it remains relevant and accurate for you. So now we're going to look at a little different example here. So we're going to walk through the same exact budget that we just walked through, or spending map or spending plan, but this one is just set up differently. So the last one you could tell was kind of an Excel spreadsheet style. This one is called bucket budgeting or a spending map, and we'll walk through this together. So we'll start with Joe's income of $500. And then we have all of the same categories here. So savings, $40 per paycheck, fixed expenses, $251 per paycheck, $33 for set aside money per paycheck, and $120 for variable expenses per paycheck. So Joe had very clearly defined savings goals. Some people put all of their savings in one same savings account. I would recommend that Joe and most people keep their emergency savings separate from their other savings. In this case, Joe will more easily be able to tell how much emergency savings he's accumulated by keeping the money for his emergency fund in its own savings accounts that's easy to access for an emergency. So you would keep this in a savings. Description of the goal, $500 a year for his emergency fund. And like I mentioned, I would recommend setting this aside in its own savings account labeled in emergency savings or emergency fund. His other goal was to save for a trip to Michigan. That should be saved in another savings account. He could label it, travel or trip to Michigan fund. Or in a certificate of deposit, since he knows he won't be traveling for at least 6 months. And the description of that goal was a trip to Michigan. So in this example with savings, there's no right or wrong answer because it really depends on what makes most sense for you and what you're most comfortable with. In this situation, because Joe is not planning on using the money for a savings for this savings goal for a year, he has more options he could use, like a certificate of deposit or a different type of savings account. Next, we move on to fixed expenses. So our total here was $251, and now we're going to look at where would this money be kept to use it most easily. And in this situation, I would recommend a checking account would be Joe's best bet to cover his fixed expenses. From his checking account, he can pay his bills regularly through debit card, cash, or check if he needs to. Also, you can set up automatic bill pay with your checking account, so your bills are automatically paid on time. I love using that. And when will Joe pay his bills? Joe should pay his bills before they're due, but in a way, or by the due date or before they're due if he can. He can pay his bills early after he receives his weekly paycheck or at the beginning of each month, just any time before the bill is due. I always try and pay mine just a couple to a few days in advance, because I do them all online in case there's a day where the transfer, takes a while or something like that. But you always want to pay your bills by the due date. Set aside money, $33.27 here, and Joe needs to find a way to keep his money set aside so he doesn't spend it on unplanned purchases, but keeps it for those non-monthly expenses that he's planning to spend his money on. So where to keep this money? I think in this situation, it really depends on personal preference. You could keep this money in a separate savings account, and then you could transfer the money for specific non-monthly expenses to your checking account when needed. Or you could also deposit set aside money into your checking account and just be careful to not use it, or open a separate checking account just for his set aside money or for your set aside money. This one can be really versatile. It's kind of each up to every individual. I personally, what I would do with set aside money, and this is what I currently do, is I have a separate savings account that's called set aside money or car money or something like that. So it's set aside and I can transfer from my savings to my checking if I need to, if I have an emergency or an unplanned expense, or an oil change or something like that. Lastly, we have our $120 for variable expenses in fun money. And like I said earlier, by fun money, I just mean money that you can spend on whatever you want. Entertainment, dinner with friends, whatever it is, just as long as you don't exceed that category. So where will Joe keep this money? Most people would probably keep this money in their checking account, and Joe would be no different. A checking account is the most logical place to keep the majority of his spending money, especially variable expenses where you're going to be making these purchases multiple times a week, like gas or groceries. To keep his spending under control, there's a couple different methods you could use. Joe could only take the amount of money he's willing to spend out with him, like in cash. So when he's out with friends, for example, Joe knows that he tends to overspend on two expenses, coffee and drinks and miscellaneous fun. According to his budget, Joe wants to spend no more than $10 a week on coffee and drinks. He has a couple options to make sure he doesn't overspend, and one is the cash envelope method. I'm not sure if any of you have heard of that. So this is where you carry the amount that you allocate for that money or for that category. So in this example, $10 a week in cash, and when he runs out, he stops spending money on that expense until next week. If Joe is not comfortable carrying cash, he could open a no fee or low fee prepaid debit card, or we at the credit union call it our Clear card. And that's where you can transfer only the money that you're willing to spend onto the card. When that card runs out of money, it will be declined, so you can't continue to spend more money until you reload more money on the card. Be careful though, those cards can be expensive, so do your research. Some financial institutions, like Denver Community, offer them for free if you have a checking account and transfer the money online or from the phone. These are great for giving kids allowances or loading your own money for spending. So the cash envelope method or like a Clear card or a prepaid debit card, those could be great options for not overspending in variable expenses because it's very easy to do. I personally have used the prepaid debit card method. I'm scared of using cash a little bit. I'm scared if I lose it, it's gone forever. So I like to use the Clear card or a prepaid debit card to help with some of my overspending categories of my spending plan. So I do have some resources here. I will be able to email some worksheets, spending plan templates, and other strategies to pay down debt. And then we don't have a handout, but I will include the money personality link in the chat box here in just a couple minutes. We can also schedule free one-on-one financial coaching. So if you have any questions or would like to dive a little bit deeper into today's topics or go over a personal budget, you can schedule a coaching at denvercommunity.coop/coaching. And then lastly, we have our free e-learning courses in both English and Spanish. They cover a ton of different personal finance topics, from home buying, identity protection, family conversations about money, you name it. And those are free, accessible 24/7 on our website. But now I do have some time here for some questions. So if you want to submit any questions you have to the chat box, I am going to get that link for the money personality quiz here pulled up, but I will be waiting for any questions you all may have. All right, let me get that link for everyone.